Everybody, it's Larry Berman here. Uh, Challenging week for the markets. But when we look at some of the charts, we don't see a whole lot yet to worry about. No major sign of breakdowns. We definitely have crested in terms of bullish momentum. Sentiment readings are sort of off the charts in terms of bullish, and from that perspective, we should be very, very cautious. Anyways, let's take a dive into the chart room and look at a few things. First chart is the S&P 500. And so if we've begun a correction phase, where does that correction take us? Well, if you look at the pre-March, April correction highs, that's around 6,100 S&P. And if we look at the retracement from the lows to the recent highs, the first Fibonacci is right at that same level. So that becomes the target here, so around 6,100 for a correction. Anybody looking at charts is going to see that very, very clear. And that's really the first line of support in terms of major support. When we talk about minor support and we roll in on the charts and look at it, while we still have a pattern of higher highs and higher lows, at no time in months have we made a lower low, right? You can see higher high, higher low, higher high, higher low, etc. So we came close in here, really close to testing it, especially on this big down week. And that was where I said, hey, we've peaked here. And then, of course, Trump rolled back on his terror threat to China, and off we went off to a new high. So, that part of it is still very real. The White House can be very manipulative here in terms of trying to support markets. If we now break this pattern of lows where there's been very strong support in the mid 6,500 area, that would be the trigger for that correction to 6,100. And not until we see that are we in anything still but an up market. We had some come to reason on the budget. So it looks like Congress is probably going to get to work here, and we should have government workers back. That was probably the catalyst for the reversal around midday on Friday, where Schumer kind of said, hey, we've got this. And Thune said, okay, no problem. We're willing to work with you guys. So it looks like that's going to happen. Little bounce here, but if this is a correction, those bounces will be the lower highs, and we'll start rolling over again. Technically, we need to break that mid 6,500 to break the trend of the last 6 months off the April lows. So that's the technical picture on the S&P 500. When we look at the bond side again, rallying up to resistance in recent weeks, coming off that. Quarterly refunding announcement, no major surprises there, but definitely still some pressure on the market. So, with that as the top end, we can now draw our line off the bottoms and say, okay, let's project that out. So let's take this out a couple months, and we have this narrowing long end of the curve. Do we break out? Weaker economy? Do we break down? Strong economy? Worried about inflation? I wish I knew the answer to that, because the answer to that could be very profitable for both stocks and bonds. And I don't at the moment. I suspect, it's going to chop around here for a few more months, and we won't get into anything. We'll know sometime in this window here before the end of the year, probably, who the nominee for the new FOMC chair is going to be and how easy the Fed might be. The easier the Fed is going to be in terms of their messaging, the more likelihood we break to the bottom. But if they're being easy because the economy is weakening, i.e. we start to get data again on the employment side, then we break to the upside. So you can see where the challenges are. When we look at the leadership, not surprising that the AI ETF has rolled over again, but hasn't broken any support. And any real trend lines came down to the 50-day today for the reversal. Not sure that had anything to do with it, but the last couple of tests there of the 50 proved to be pretty good support there as well. And then finally, we look at the retail holders and all the retail stocks, and again, pretty healthy. So while we hear out of earnings from corporate America that the lower end consumer is struggling, we're not seeing that yet reflected in weakness in key economic barometers in the stock market. Anyways, that's the message the market sent me this week. Have a great one, everyone.